the markets always are going to cause the most amount of pain to the greatest number of people. And they're going to, at the moment where, the market says, oh, Bitcoin is no longer digital gold, then all of a sudden, maybe Besant decides he's going to add a little bit for the reserve, and then it's all of a sudden, it is gold again, or whatever it is.
The reality is that Bitcoin has always found lows in late February or early February, but oftentimes late February before rallying into early March. And what's really interesting is if you look at weekly candles, right? If you look at weekly candles for Bitcoin, what you'll see is that you can identify that early March candle, right? You'll have a lot of red in February, and then you can see that candle where it tops out in early March.
Bitcoin has a habit of testing people right at the edge of their patience. Just when the crowd starts doubting its role in the bigger financial picture, something shifts. Sentiment turns sour, headlines grow confident in their skepticism, and traders lean too far in one direction. That is usually when the market sets its trap. The story around Bitcoin as digital gold feels fragile at times, especially when macro uncertainty clouds everything else. But markets rarely reward comfort. They reward positioning before the narrative changes. Dan Tapiro leans into that idea. He argues that markets are wired to inflict maximum frustration, flipping sentiment at the exact moment consensus feels strongest. When people begin to dismiss Bitcoin's strategic relevance, it only takes a single policy move or institutional signal to rewrite the script. A quiet reserve allocation, a shift in tone from policymakers, and suddenly, the asset everyone questioned regains its aura. The reversal never feels predictable. It feels inconvenient. Meanwhile, Ben Cowen approaches it from structure rather than headlines. He notes that Bitcoin often carves out lows around late February before momentum rebuilds into March. On higher timeframes, you can almost see the exhaustion phase give way to renewed strength. If that rhythm holds, the next move might emerge precisely when confidence runs thin. Let's watch clips from Dan Tapiero's explosive interview to gain more insight. Please don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the rest of the video.
It started in May of 23, or I think it was June, when Larry changed his mind about Bitcoin. I think that was sort of the beginning of this bull phase. He really kicked it off. And then the launch in January 24 of all of the ETFs, frankly, was definitely a legitimizer. I think the big change now is that Bitcoin, and I think to some degree ETH as well, maybe not quite Solana, maybe Solana too, but are really considered established assets that now must be considered within an asset allocation model. And I think, when I did this event, 2 years ago, or I did it last year, 2 years ago, it was still a question mark whether, it belonged in the portfolio. And I think now, of course, with some of these companies, the DATs that are owning Bitcoin, plus some of the IPOs, plus the successful ETFs, I think there's really no doubt now that Bitcoin is an institutional asset. And so we wanted the institutions to come. They're here, and now the price is cut in half in 4 months. They're not the same, but I will say, I've been in broadly in the crypto space since 2012. The sophisticated investor and the world that I used to be in, the hedge fund world, is very aggressive, very smart, very intelligent. Once an asset has the liquidity of an institutional type asset, they are very happy to short as well, and they're aggressive shorters. So when you see hedge fund performance sometimes do very well, as they did in January and let's say in Q4, they're on both sides of the market. So it's not like be careful what you wish for. I think we broadly as a space have won. But along with winning comes some other things that maybe the crypto native guys aren't so used to, which is a very aggressive investor base who are on both sides. I'll tell you the one thing is, it is still remarkable to me. As far as I know, we are the only growth fund exclusively focused on crypto, blockchain, Web3, digital assets, however you want to call it, the digital asset ecosystem, of which Bitcoin is the core of. And especially now with the growth in stables and RWAs and all the, the explosion in poly market and prediction markets, all of these perps, all of these things, the overall digital asset ecosystem continues to grow, and the companies that are building that world, that's who we're investing in. The narrative about Bitcoin as digital gold is very real, is very important. It's not going away. It doesn't matter that gold is up and silver is up in the last 18 months, exponentially, and Bitcoin is down. Over the long term, of course, Bitcoin has dramatically outperformed gold. I have both. I believe that you should have both. I think they serve different roles within a portfolio. A little too complex to get into with only 2 minutes. But the markets always are going to cause the most amount of pain to the greatest number of people, and they're going to, at the moment where the market says, "Oh, Bitcoin is no longer digital gold," then all of a sudden, maybe Besant decides he's going to add a little bit for the reserve, and then it's all of a sudden it is gold again, or whatever it is, whatever the narrative. But the characteristics that we've talked about at this conference over the years on our interviews about sort of the pristine collateral aspect of Bitcoin is still there. And at the core of the whole ecosystem. And in terms of macro moving around, look, I put out a post last week, and I think the Fed Chairman Powell, he's definitely not a criminal. I think the whole Trump attack is really misguided, but he is a very bad Fed chairman, the worst that I've seen in my life, and I think if you talk to someone like Scott Bessent, who's a macro guy like me, who worked for the same guy that I did. And I think, quietly he would probably say the same thing, not in a public venue. Kept rates too low for too long, and then overhiked, and then left them too high for doing it. And now, it's been clear the employment situation here has been, I'd call it quite dire for the last year. And with those revisions yesterday, the rates are just much too high given where the underlying economy is, where employment is, and also what the capital needs are of the country right now. And I think this is another very important part of why we've had this correction in crypto. It's just that, you're having a company come out with a $1.2 trillion IPO. You've got AI, robotics, space, all these other things pulling capital away from crypto. That's okay. But we're feeling it because there isn't enough liquidity out there because policy is too tight. And so I suspect the dollar keeps going down. This is, the Bessent's essential policy, even though he won't say it. And I think this is going to be very bullish for us over the medium term, gold and Bitcoin.
If you trace this cycle back to its real ignition point, it was not a meme rally or a retail frenzy. It was a shift in tone from the very top of traditional finance. When one of the most powerful figures in asset management publicly warmed up to Bitcoin in mid-2023, it quietly changed the conversation. Then came the ETF approvals in early 2024, and the floodgates opened. Bitcoin stopped being a speculative side bet and started looking like a line item. Portfolio managers who once dismissed it were now modeling it. Corporations added it to their balance sheets. IPOs and public vehicles tied to digital assets reinforced the idea that this was no longer experimental. The institutions everyone said would never come finally arrived. But institutional capital is not sentimental. It is strategic. Once liquidity deepened and the ETF wrapper made access seamless, Bitcoin entered the big leagues. That means long and short positions, rapid rotations, and ruthless risk management. A sharp drawdown is not proof that the thesis failed. It is proof that the market is more complex now. Crypto natives asked for Wall Street's validation. They got Wall Street's playbook too. Zoom out and the broader thesis still holds. The digital gold narrative has not vanished simply because gold had a strong stretch. Over the long arc, Bitcoin's performance speaks for itself. Many serious allocators now treat both as complementary tools. At the same time, tight monetary policy, softening employment trends, and capital being pulled toward AI, robotics, and massive public offerings have squeezed liquidity. When policy eventually loosens and the dollar weakens, the environment could shift quickly. What feels uncertain now may look obvious in hindsight. While Dan Tapiro focuses on the macro shift, institutional adoption, and the forces driving liquidity, Ben Cowen zooms in on structure and timing. One looks at who is entering the arena, the other looks at when momentum historically turns. Let's watch clips from his interview.
Let's go ahead and jump in. So we put out a video a couple of days ago called Dubious Speculation, where we talked about the idea of Bitcoin finding a local low in late February before rallying into early March. And one of the reasons we talked about that is it's funny. I mean, I know there's a narrative going around right now all over crypto Twitter as to what's behind the rally, but the reality is we've seen this so many times before, right? Now let's go all the way back to 2014 and you will see a very similar move. Back then, Bitcoin put in slightly lower lows, right? You had a low on February 10th and then a slightly lower low on February 25th. So early February, late February. And then you go look at it today and you'll see something very, very similar, right? You had your first low, what was it, like the 6th or something? Yeah, February 6th. And then the next one, February 24th. So you have one low in early February, one low in late February. If you go look at 2022, you will see we had a low by Bitcoin in late February as well, on February 24th. And then Bitcoin rallied into early March, and then it had a correction, and then it had one more rally, and then eventually everything came crashing down. But you'll notice that February 24th was that low in 2018. If you go, or sorry, in 2022. If you look at 2018, you will also see that Bitcoin found a low in February. That was February 6th. And then it topped out here in early March and then came back down. So what you'll notice is that early March tends to be a pivot point after a February low. You have a low in February and then a high in early March. So if you look at it in 2018, the high was on March 5th. If you look at it in 2014, the high ended up being on March 3rd. And then if you look at it in 2022, the high was a little bit, I mean, eventually it went a little higher a little bit later in March, but we did have that initial top on March 2nd. So you've had local highs on March 2nd, 3rd, and 5th in prior midterm years after a low that was formed in February. And you can actually better visualize this if you look at Bitcoin's current year-to-date ROI and you look at the average of prior midterm years. On average, you can identify that low that occurs on the 56th day of the month, again on average, and then we rally typically into the 62nd day of, or sorry, not the 52nd day of the month, the 52nd day of, the 55th day of the year, and then it rallies up, 56th day of the year, and then it rallies on up into the 62nd day of the year. Again, these are all averages. If you look at every single one, they're all slightly different from each other, but they all follow a very similar pattern where they see, all of them saw a little bit of renewed strength into early March. Now in 2022, we got a correction and then it went up a little bit more in late March, but in all cases, Bitcoin then came back down as the year went on. And so when you look at 2026 and compare it to the average of prior midterm years, and you put on one standard deviation from that average, you can see that Bitcoin has spent a lot of the year just trading within one standard deviation of the year-to-date ROI in prior midterm years. In fact, you can see how closely it's been tracking it on the way down, then starting to go back up, and that'll draw people back in. They're going to run with the narrative of the day that there's no point even me saying it, because no one's even going to care about the narrative in a month, because that's how the market works. People will try to explain what's going on in the market based on the news cycle, but the news cycle just simply doesn't matter. And I mean, I see what people say, and the reality is a lot of people spend all of 2025 being essentially permabulls, and we're unable to pivot. We're unable to pivot into the bear market late last year, and now they're desperate for any rally to then justify, like, okay, this has got to be the start of the new bull market. But I think if you were able to pivot late last year, you have a little bit more flexibility on this, because you're like, all right, I'm not as married to the idea that this has to be the start of a new bull market, because I'm not down 50% on my investments. Okay. If you are down 50% on your investments, then you're much more likely to want to find every single rally, every single narrative to support the price will immediately come back. I know, because I've been in that position before, right? And I know a lot of guys are in it right now. And, I mean, it's unfortunate, but that's the way the market works. They bet on the super cycle and they were wrong. And now they're basically trying to go through the midterm year explaining why every single rally is a rally to new all-time high, when that's not the most likely outcome. I think that, when you look at the chart, it's undeniable that Bitcoin tends to find a low in February and then tends to rally up into March. And then as we get, especially into that first week of March, that's that first window of weakness. I'm not really sure what the narrative people will use will be. Maybe it has something to do with the labor market data. I don't really know what people will say. But a lot of times you'll see Bitcoin, I mean, even the average midterm year rallies at the beginning of the year, just like it did this midterm year, right? We go up a little bit, it draws people back in, and then we drop into late January, early February. The weakness persists until late February. On average, we get that rally into early March, and then the markets cool off again as you go later into the year.
A few days ago, the idea was floated that Bitcoin might be carving out a familiar kind of bottom, not because of a flashy headline or some viral theory making the rounds, but because the chart itself has a memory. If you strip away the noise and scroll back through prior midterm years, you start to notice a rhythm. February often brings exhaustion. Price drifts lower, sentiment sours, and timelines grow restless. Then, just as frustration peaks, momentum quietly shifts into early March. It is subtle, but it shows up often enough to raise an eyebrow. This is not about predicting a straight lineup. In past cycles, that early March strength did not always mean the year was saved. Sometimes it led to another correction. Sometimes it offered a temporary reprieve before deeper weakness. But the pivot itself, that transition from late February fatigue to early March resilience, has appeared more than once. When you overlay current price action with the average performance of previous midterm years, the resemblance is hard to ignore. The tricky part is psychology. Traders who overstayed the bullish narrative last year may cling to every bounce as proof that a new supercycle has begun. Others, who managed risk and adapted, can view this move with more flexibility. Markets will attach a story to whatever happens next. They always do. But whether the narrative sticks or fades, the pattern has already done what it tends to do. Remind everyone that timing, not headlines, often drives the turn. As we wrap up, have you noticed the late February to early March pattern before, or is this the first time you're seeing it? Let us know your thoughts in the comments below. Share this video and hit the like button. Thanks for watching. Don't forget to like and subscribe.